Good evening, everyone. Time for another silver update. This is the weekly chart of silver provided by netdania.com. You can click on the link below. I've outlined a couple of key formations here. The primary formation out of the 2008 crisis was a sort of cup formation, and you could call it a falling pennant. And the current formation we're in is more of a flag pennant formation, and it seems to be rising formation. Now this could turn out to be a formation similar to this if we round down and then come back up, so that's quite possible. If we look at the MACD on the weekly, we can see that at the 2008 bottom we made a break through the zero line, and then we kind of had just a kiss of the MACD and then a turn to the positive, and that accompanied this steady rally until we had the significant breakout with QE2. At this point, we're looking at a sort of kiss of the line here, very similar to this right here, but we haven't crossed up above the zero line, so that's yet to be in the future. Obviously, silver is very well sold off, and is not, I would not say oversold at this point, but has pretty much stabilized and is ready to resume a rally. If you look at the overbought MACD that I showed you on Apple Computer, where the number was up around 57, you can see that silver has pretty much corrected. Now, if you remember, very close to the May top, we had a comment by Jimmy Rogers about how he was worried about silver becoming a bubble. A lot of people quoted that at the time and said, Jimmy Rogers says silver is in a bubble. Actually, that's not what he said at the time. What he said was that if silver goes to triple digits, then he would be concerned about a serious crash in the price, because that would extend it way beyond where it should be, and that would probably presage a parabolic collapse. So I don't think this is a parabolic collapse, but this is more just a healthy consolidation, and it's a setup for another run to a higher stage. You can see that the range expansion from this run up and this run up, you can just look at the movement in the lines, the weekly movement, and you have enormous moves up in here compared to the size of these moves. Although the 2008, there were fairly large moves here. You can see a weekly move from about 17 down to about 14, another one 15 down to about 12 or so. But compared to this move here, where you get a move from about $41 all the way down to a $10 move. So clearly silver is expanding its range, and we're still moving with that volatility. You can see the spike up to 37 was much larger, even though we're consolidating still. That spike to 37 was much larger than any of the prior spikes that we have. So silver, and especially these bottom spikes here, silver is continuing to expand its range, and once this MACD crosses to the positive side, we begin to build again, then we'll expect to see a rally towards the old highs, and then another range expansion that will be as proportionally large as we had in these prior range expansions. Now, I wanted to go back to the issue about Apple Computer, but before I do that, I want to take the question of the day, and this is from Travis, and he says, thanks for the site. I appreciate your hard work. I'm interested to know your thoughts on the price/value of silver in an economic collapse. In many of your videos, you mentioned that in times of trouble, people will flock to tangible assets like silver and gold. That being said, How can we account for the fact that in 2008 the price of silver dropped to $9? According to silverinstitute.org and others, the main usage for silver is industrial applications, and this accounts for nearly 50% of silver usage. This being the case, could we not see another drop in the silver price similar or worse to 2008? While I'm going very long on metals and I believe that silver/gold will protect my wealth, what else would you suggest I do to protect my wealth in an end of fiat situation rather than having all my eggs in one basket? Thanks. Well, it's difficult with the type of thing that we're facing. I don't really suggest that you put your eggs in a paper basket. And if we don't put our eggs in paper baskets, then that doesn't really leave a lot. Pretty much it leaves the commodities. So that not being futures contracts. So that's why gold and silver have always been money, and they still are money, although that is not something that the powers that be want you to think about. But gold first and then silver are the elements that serve those purposes the best just by their nature. Gold doesn't rust. Silver tarnishes a little bit, but pretty much they're a perfect store of wealth. There's a lot of other things that have value that you can put your money in. There's land, which has other tax and ownership consequences. Of course, there's the soft commodities. Problem is there's storage and all that stuff. There's oil. Again, that's a storage issue. So that's the reason why gold and silver have been money for thousands of years, and in my opinion will continue to be money. But I wanted to jump over to the Silver Institute and just give you an idea of why I don't think that these worries are really justified. So let's jump over to the Silver Institute, and I've gone down to the supply and demand fundamentals, and this is the total demand line, and I don't have the years, but you can see that just looking at the numbers here, I would ask you to guess which year is the year of economic collapse. So we have 877, 868, 881, 879, a little jump to 929, 923. Then we have a fall to 907, a small fall to 904, back up to 922, and then a big jump to 1056. So this is total demand for silver. Now, by looking at those numbers, one would probably guess that our economic collapse occurred from here to here, where we had a drop of about 15 to 20 or so on 15 or 20 million ounces in demand. If we scroll up and look, you can see that was 2006 to 2007. So 2008, 2009, and 2010, which was the catastrophic economic collapse, we actually just dropped 3 million ounces in 2008, and then we rose again 18, and you can see this enormous jump in 2010. So I think that pretty much proves that that theory is bogus. Now, of course, the reason that it's bogus is that it's strictly a U.S.-centric view. It's a view that if the United States economy goes into recession, then the demand for silver is going to drop drastically. The other thing we want to look at is the industrial applications, because that's the primary use, although there is a large growth in the coins use. But you can see that for the same period where we had the 907 to 904, we went from 491 to 492. So we did not drop at all during the worst financial crisis we've seen in the last 70 years. you can see the growth: 349, 355, 368, 387, 431, 452, 491, 492, and then here's your drop actually in 2009, and then a snap back right back up to where we were. So I think that the people who are making the claim that the reason that silver is going down is because of a projected economic collapse really don't have any basis to make that argument. Now, if we go back to the coin demand, you can see that something really interesting is happening, where we go from 30 to 31 to 35 to 42 to 40 to 39, 39, 65, 79, and 101. So a very, very large increase in the coins and metals category. That's obviously the silver stackers who are buying silver eagles and other bullion coins. I just don't buy the argument that a projected economic slowdown has any impact on the price of silver, and I think the numbers bear that out. Now, the other story I want to talk about is a follow-up on yesterday's story, and that is about Apple. I had a lot of criticism about my call that Apple Computer is in a bubble and it's going to crash, and a number of the critics said something to the effect of, yes, you're just looking at the technicals, you're just looking at the price, you're just looking at the parabolic rise, but you're not looking at the fundamentals. So I want to take a moment and look at the fundamentals for Apple. You can find these if you go to yahoo.com, put in your ticker symbol, and click on the key statistics. You can see the key statistics for every one of these stocks. Now, the first thing you want to note is that Apple Computer's share price is $633 a share. They have roughly a $590 billion market cap. They have revenues of $127 billion, and they have cash of $30 billion, and they have zero debt. So keep those numbers in mind: 633, 127, and 30 billion in debt, or in cash. Now let's jump over to Cisco Systems. This is a company that was one of the more recent darlings of the tech community. And you can see on Cisco we have a price of $20 a share. This is a $109 billion company, but this company has $44 billion in revenues. So that's roughly 1/3. So if we adjusted just for the revenues, that would yield a $60 price. If we made equivalent revenues, which are about 120 something for Apple, we'd have a $60 price on Cisco, which is 1/10 the price of Apple. And if you look at the situation for debt, you have Apple had zero debt. Cisco has 16 billion in debt, but it has 46 billion in cash. So roughly a net 30 billion, the same as Apple. The next company is Microsoft, and Microsoft is about a $264 billion company, and they have 72 billion in revenues, which is about maybe 2/3 of what Apple has. They have 12 billion in debt, and they have 50 billion in cash. So they have 38 billion net cash, which is 8 billion larger than Apple, with a price of 31. So if we multiplied to get the revenues the same as Apple, we'd have to multiply by a factor of, say, 2/3 or something like that. So we'd have to increase this price to, say, $50. And so you've got a price of $60 for 120 billion in revenues on Microsoft. You got a price of about $60 for the same revenues in Cisco, and you've got a price of $600 for the same revenues in Apple. So I think the fundamentals show you that Apple is indeed in a bubble. It's not a matter of a company that is producing profits and returning them to their shareholders. Now, the other thing I wanted to point out with Apple, if you go down here and you look at the dividend, you can see that the dividend is not available. Apple does not pay a dividend. So if you remember a lot of the criticisms against gold and silver, people have said, well, there's no return, there's no interest, there's no gain except for capital gains. Well, same thing with Apple. Apple does not pay a dividend. Now, Cisco Systems, on the other hand, pays a dividend. The dividend is only 1.3%. The forward is 1.6%, so obviously a lot lower than inflation, but at least they're returning some money to their shareholders. Microsoft is a little bit higher. They have a 2.3% dividend yield, forward looking 2.6%. So both Microsoft and Cisco, who have as much or more cash than Apple, are returning a dividend, while Apple is not returning any. So let's go back and look at the charts. This is Apple on the max, and you can see that this is quite a parabolic looking move. If we look back into the history of Cisco Systems and look at the max on Cisco Systems, you can see that Cisco Systems also made a tremendous parabolic move and then an enormous crash. This company has never been an unprofitable company. It's always been one of the most profitable companies in the world, and of course every router and switch in every country of the world, there's a Cisco router and switch out there. Half the internet is built by Cisco, so they're not going anywhere, but you can still see that they crashed from about $78, $77 all the way down to about $10. So an enormous collapse, and they never recovered. They've just flatlined since then. Same thing with Microsoft. If you go and pull up a Microsoft chart, you can see that on the long view, Microsoft had a tremendous run-up and then a collapse. Now, it was not as large a collapse as Cisco. You can see that they collapsed from about $60 down to the low of about $15. So they lost about 75% of their value, pretty much flatlined. So parabolic moves are followed by these crashes. There's nothing wrong with either of these companies. As I've shown you, they are net to the good of $30+ billion, but they're no longer a growth story. And that's the key issue with Apple. The reason why Apple has risen so much is because they're betting on growth. Now, my opinion is that if you have a company, again, back to the key statistics, if you have a company that has a market cap of $600 billion, I can just about guarantee you that your growth story is over. There just isn't enough money in the world for this company to continue to grow at the rate that it's grown. Yes, it could go to $1,000, but there's no question in my mind that this stock is going to go down at least 75 and probably 90% before it just flatlines and does exactly what Cisco and Microsoft do. So I stand by my contention that the Apple story is really just a story of people looking to buy at today's price and sell to someone else at a higher price. It's not a stock that returns a dividend. It's not a steady investment play for grandma or anyone else. This is purely a speculative play, and an enormous amount of dollars are rushing into it, trying to sell to the highest bidder or the next bidder. And of course, that's exactly what happened with housing. Everybody was flipping houses. People were buying 5, 6, 7, and 8 houses, and they were certain they were going to flip them to someone else at a higher price. That's what you have going on in Apple Computer. It has nothing whatsoever to do with the fundamentals. It's just simply a bunch of printed money rushing into the latest bubble, and it will crash. And I am going to make sure that I revisit this video in the future when Apple Computer is down around $150 a share. So back to the main story, and that's going to be silver, which is not in a bubble at all. It's trying to correct back up above the zero line. We've got a long haul for the weekly, but we're establishing a very, very strong base around $30, and that's a great stacking price. But in the future, we're going to go much, much higher because silver has not even started its parabolic run. And we'll talk to you next time.